Well, we are looking to design what we call a backstop that will help us with the normalization of monetary policy process. This is our main goal. It's not about the stance of the monetary policy, that's very clear to everybody in the Governing Council, but we need to cope with these risks of fragmentation. We announced already instruments to deal with that, and actually, as the President said yesterday, it will begin already July 1st, the flexibility in the PEP purchases. But we believe that we need to go a little beyond that with this so-called anti-fragmentation tool. And the main goal will be to have a backstop that is credible and ideally not to be used if the credibility of what we achieve is sufficient.
I think there is a differing assessment as to whether we're already seeing a risk of fragmentation as of now, or whether this is just a precautionary measure. What's your assessment?
Well, it is precautionary for sure. We announced the first step of this process already in December when we decided to hand the net purchases of PEP in March. We announced that we could use this flexibility. And actually, after announcing that we will apply this flexibility, there was a significant ease in the markets. We see risks of fragmentation. We talk always of risk of fragmentation, not of actual fragmentation in the markets. But this is somehow endogenous, you know. It depends on the policies we implement, the instruments we have. We will continue to monitor all the risks that monetary policy face to mitigate them, to prevent them from materializing. That's the point. So it's a constant monitoring of the risks.
Portugal is one of the rare countries in the Eurozone which is already trying to cut its debt level. So are we going to see another round of austerity? I know that's the ugly word from the debt crisis, but well, is that what you plan?
Well, we've been able to reduce debt already since 2016 in a context that it's not described as austerity. 2020 was an exception for everyone, but in 2021 the process of reducing debt in Portugal resumed quite substantially. Actually, it was the largest debt reduction in a single year in more than 20, 30 years. So it was a very strong reduction in debt already in 2021, and we expect it to continue 2022 and the following years. So this is something that is a very important goal for economic policy in Portugal, and well, it's a matter for the government, but I can say what is our evaluation of it. It has been quite successful, and we really believe that it's going to continue. Reaching 100% of debt over GDP ratio in the next 3-4 years would be very, very important for Portugal in terms of the risk perception that the country still has, but much more reduced from previous years.